Yeah. Well, I would have a forest full of trees if I turned a new leaf every time I broke a promise that I thought I would keep. And I'ma harbor that in secret. It's hard to hear your feedback. I'm playing like the Phantom of the Opera on a keypad. Hopping off the deep end happily, ain't no wisdom in my teeth left. Just cavities. I've been trying to keep my feet wet. Walking over water, about to run a little farther. Doing a Our Father, but you probably atheist. I'm still speeding like Dennis Hopper. There's a bomb up on this bus, so where the fuck's Keanu Reeves at? You best to relax. I'm staying on my grind, feeling Amy off this wine like I ain't going back to rehab. Feeling like a bipolar reject. I'm even high when I'm sober, and my mind's a solar eclipse. A born-again fetus who should have been aborted. Hopped about my mommy's chest like, what's up, I'm important. That was morbid, dog. And kinda sorta wrong, but nothing's off limits. I've been ripping down walls like Gorbachev. I do it for my dogs and do it for the cause, yeah. You do it for the blogs and do it for applause, yeah. You do it for the wrong reason, so I have to judge. The beat up on your song is decent, but your rapping sucks. That's why I can't endorse it. But still you're in the stores and people flock with open wallets to cop your garbage recordings. But I keep my hands in my pocket, that's ironic, like Alanis Morissette. I hate this game, but I can't just forfeit. Don't want the fame, but I'll take the fortune. The moolah, they say what you give to it, you end up attracting 2 yards. That's why I put my 2 cents in and got some change back. Guess it all makes sense in my brain, man. My bedroom feels too small for me, but the outside world's like doomsday, honey. I'll go Usain once you say run it. Lot of fish in the say, but 2 ain't nothing. My bedroom feels too small for me, but the outside world's like doomsday, honey. I'll go Usain once you say run it. Lot of fish in the say, but 2 ain't nothing. There's a rip tide coming, hold on. I think the sky's falling on us. There's a rip tide coming, hold on. I think the sky's falling on us, yeah. Falling on us, yeah. Falling, yeah. There's a rip tide coming, hold on. I think the sky's falling on us, yeah. Cloud.
What's going on? What's going on? Good morning, traders. Welcome back to another live stream. If you are new here, my name is Zach. This is Real Deal Futures. Make sure you read what is on the screen here, the disclaimer. I'm not a financial advisor. None of this is financial advice. I'm just an idiot on YouTube, not a suggestion or recommendation to do anything. Trading's risky. Most traders lose money. You're probably going to lose all your money if you trade. Make sure you also read CFTC Rule 4.41 on simulated trading, which is what this is in funded prop accounts. Now, let's get into it. Good morning, guys. Good morning. Good morning. Let's run it. Let's check these markets out. Make sure you guys can hear me okay. Everything looks good. Looks good. Nice. Cool. So here on TopstepX, checking out MNQ. I'm in a 50K XFA. And I'll go through some analysis with you guys this morning, man. Interesting day yesterday. Took the stop on that one. Messed around with an aggressive long. Ended green, but not something that I wanted to call, as it was a fairly risky play. And again, I'm just kind of running into some of these where it's a quick move, and I don't have the time to post the chart and do the setup, but trying to get better about it. So this is still looking bullish to me. So let's kind of go over higher time frame first, do a little bit of top down, and then we can kind of take a look at what happened yesterday and, maybe what some initial expectations are today as the market's open. 9:34 a.m. Eastern, coming up on that right now. If we zoom way out on the daily, if we zoom way out on the daily, we are still pushing to the upside, right? We did have this nice uptrend, this really tight uptrend here, start to be challenged by this structure to the downside here on NQ, right? MNQ rather. We talk about the same stuff every morning, but just so we can kind of frame reference, you understand what I'm looking at. Lower highs getting put in, day over day, week over week. Lower lows getting put in, week over week, I should say, because this is the daily. We had a really, really nice run up here. Super aggressive sell-off on Monday. Big gap down that hasn't been filled. We know what happened there. Chinese AI model DeepSeek came out. Maybe some stuff around that, along with politics and 37 other crazy things that are going on in this headline market. Triggered a pretty gnarly sell-off, but a rebound really, really quickly, right? We bounced aggressively, right? As you can see, we pushed back up, and we've put in 2 consecutive bullish days. We are opening up green today. We've already cracked prior day high, but we are below it right now. So on the lower time frames, as we start to zoom in, we'll run the 15-minute pretty zoomed out. again, here's that same uptrend, aggressive sell-off. This is the week now that we're looking at from here to here. Today's Thursday. Yesterday, we opened up to the downside and really drifted lower all the way into the afternoon. This was a pretty gnarly wick down and then a crack back up that we didn't come back below. This was a really nice entry for anybody that was getting long down around this level. If you go back and watch the beginning of yesterday's live, I had this level on my chart. It's the same level from yesterday. It's what I was looking at for potentially getting long. I got long much earlier, ran a stop loss down here and got taken out. But we chopped a whole lot on FOMC, on the Fed information, and then rallied, right? We rallied on the overnight session. We were above VWAP for most of it. Coming into pre-market, pretty much just VWAP chop. So how I'm reading this, again, not as strong of a maintained blast off, right? Like we didn't just wick down here and then take off like a rocket, but this is still very bullish. So coming into this, like I said, I try to stay unbiased. I try to stay neutral, right? Because in case we start selling off, I don't want to be just stuck looking for buy, and then I go back and we had a beautiful, trend to the downside. But initially, I do like to have a thesis that I'm building right now as the market's open and moving. Initially looking long. Again, it's been the same thought for the last few days, and I've had the right direction. It's just been a little bit difficult to get a solid entry and level invalidation. But this still looks bullish. Looks like rate came out. Maybe we didn't like it at first. We kind of decided. Conference, afterwards, 30 minutes after Jerome Powell talks, and here we are pushing back up overnight session. And now selling off into the open, at least for right now. I'd like to find a way in long on this right off the bat. I think this is a 15-minute chart zoomed out. I'd be okay with a really aggressive entry down around this area. Stop loss below yesterday's low. I can absolutely see this trend continuing. I can see us, forming another leg up, right? If we're looking at just nice, normal price action and market structure, right? We are pushing up, putting higher lows in, failing to get below lows, continuing to put higher highs in, right? In this little zoomed out 15-minute structure to the upside. I'd like to see that hold. And down around this level is a nice safe zone for a retest. I would consider an aggressive entry down here or wait, get a pullback down here and potentially blast off to the upside, stop loss much tighter, just below a level of structure that forms for the session, right? I would be okay with either one of those. Conversely, if we kind of just sit around VWAP, I'm going to be patient. If we turn and burn from here and just break out to the upside, I may be struggling to find a way in. I might go in light risk, really wide stop loss, because I just don't want to be taken out. I think any of this is safe, but I don't want to miss a move to the upside. I can see us headed towards the 900s and even higher over the next couple days. Again, a little bit choppy around VWAP. Don't really want to get involved right in the middle of this. I'd like a beautiful wick down below. Enter aggressively with higher time frame structure and trend to the upside. Counter to the move, for the day. Kind of what we were looking at yesterday. Conversely, we start selling off. None of this analysis holds. We're just going to look really weak. I'm probably going to take a stop out getting long somewhere. That would probably happen first. We come down and break prior day's low, and this turns into a really, really, bearish daily candle. Maybe I look short some way on the way down after getting stopped out, but I don't know that I see that happening. So that's my thought process coming into today, right? We've been maintaining some structure to the upside after a gnarly sell-off. We've had multiple days now to continue this move, and it doesn't look like we want to continue lower, right? We could have pulled back up here, wicked higher, and market said, okay, we faked everybody out, and now here we go. But we're not doing that. We're holding. We get more information from the Fed. Pushing higher, testing this. These highs. This looks like we want to go, right? At least to me. So again, my challenge is going to be to not jump directly in on the breakout. It's really not what I would like to do this morning. Something along those lines is not great because I want my entry down here. I'd really like an entry like that. That would provide some nice risk structure, right? We have to come down, break prior day's low. You know, this turns into a gnarly bearish day. I'm dead wrong. We push to the upside. I've got a nice entry, really nice invalidation point. You know, decent target up here, closing this gap, coming up to this area of consolidation, right? If my volume profile resets, we'll see some volume traded up here. That would be pretty sweet. Yeah, looking at getting through this area of low volume. We come up here and test this. I think we potentially can break and run. So I may be looking to move on it and to take that trade, right? To take that breakout trade. And say, like I said, maybe light risk, wide stop loss. You know, the structure just wouldn't be as nice, right? If I'm looking at here for initial target, you know, look at what happens to risk to reward. This would need to be a really, really big move to turn into something super nice. I'm not comfortable going with like a stop just below the low. That's like super tight. I think we could wick around first. So we'll see. We'll see what the market has for me. Would really like a sweep below overnight lows, you know, down towards this zone right here, somewhere in the middle here, and then some hesitation, some stopping, you know, some buyers stepping in. So we will we'll have to wait and see. Good morning. Good morning. Pre-FOMC move is bigger than the actual FOMC move. Yeah, yes, it was. Hey, what's going on, guys? Let's take a look at the other markets are doing. Yeah, similar structure at ES. Dow kind of in its own world, but somewhat similar. Let's take a look at Bookmap together. My favorite order flow tool. If you guys want to check out Bookmap, link below. Full disclaimer, I'm still a partner, although I got to talk to them. Got to hit up my peeps from Bookmap. Getting a little bit dicey with this crashing. I don't know what's going on. Orders, not a whole lot. You know, not a ton on the book. You know, we're relative to other days, this is pretty light, right? We don't have big stacks of orders. We have some on the book up here at, let's say, 677-ish, and then the 700 level. We got some down below at the 500s, but not a whole lot. You know, not a ton stacked up. You know, 40, 80 points away from price. We got some stuff decently far away, and even that's not heavy, right? It's not hundreds of orders. So thought we had something on the book that was pretty heavy earlier this morning. No. So nothing crazy out of Bookmap. Again, I use Bookmap in a very, very simple way. I want to see big stacks of orders on the book, areas of liquidity, and maybe be cautious if we start to head towards those, that we may see some volume traded. We may see some, you know, some volatility. Price seems to be drawn to those levels, may act like magnets, for lack of a better term. But the more zoomed out I get, the less reliant I am on Bookmap, the less I find it really, really helpful, right? I kind of just have to withstand some of the low time frame movement back and forth. So I think it can be really helpful to kind of glance at. That's why I haven't been showing it so much, to find really big orders, but like watching every movement up and down, 10, 20 points on NQ on Bookmap. It's very helpful if you're on low time frames, right? Like I'd be looking at this really clearly, saying I think we're going to go up and tag that, crack to 700s, maybe we're going to watch stuff come on and off the book right here. See that? But again, Bookmap. So nothing crazy. That's what I'm taking. We got some stuff above. Looks like we might want to crack to the upside. Some stuff way down below, down at 550 and 500s. But nothing absolutely insane. Yeah, choppy so far in the open. Nothing crazy. Coming up on 945. Looking for a buy on this boy. Looking to buy a dip here on NQ. That would be the stupid slang term to use. Outside of us starting to sell off really aggressively, like really, really aggressively, and then not find buyers or support, I'm looking long on this. I think we would really want to start to break some of this higher time frame structure before I would be really bearish on this. Entered long at 604, got out 613. Got you. How do I train myself to keep trades longer? That's a good question. Well, number one, what's your thesis, right? If the game plan is you're going to set a take profit and a stop loss, and you continually mess with your trades and you're not going to manage them, I would highly recommend you start to walk away from the screen, right? Take the easy road first. Like put training wheels on, take the shortcut, and put the trade on. Set your stop loss and take profit. You are taking on a little bit more risk doing that, just in case something crazy happens. Something doesn't get filled. But I would just accept that risk and then let the trades play out. This way, you at least start to collect data to say, look, I shouldn't touch any of these trades. Sure, I get stopped out about half the time, but I make more when I'm right. And if I just don't close out early, which I always do, I do better. Then you come back after building some confidence in that, taking the easy road, and you start to take the training wheels off. And you say, I know what I'm supposed to do. I know what I need to do. Now let me start training myself on the next level, which is watching the market play out. Maybe you want to be able to move stop loss to break even. You want to be able to manage the trades. But you have to build an understanding of what you're doing and why you're doing it. And does what you're doing make sense, right? Does actively managing your trades make sense? Closing out winners and losers early. If yes, great. Keep doing what you're doing. Maybe have some rules in place to help you out. If not, challenge yourself. Like I've been challenging myself much more on these higher time frame trades to hang on to them for a long period of time. Really not touch them. Like yesterday was an example. Held that bad boy all the way into the afternoon, hours and hours and hours. Back and forth and drawdown, near break even, drawdown again, because my data shows that I should be doing that. Really not helping myself messing with these. Pushing to the upside on NQ. Yeah, so here comes decision time, right? Here comes decision time. I got two options here. I would have liked to pull back like I talked about. So my two options are take the breakout. Both are in line with my trading approach. Both are in line with my, my thesis for the day. It's the same direction, right? Option one is take the breakout trade, tighter risk structure. The benefits of that are I'm involved in the market. I don't miss the move to the upside that we may just take off and run right here. Downside risk is if this ends up just being a choppy day and we have to pull back way down and sweep these lows, I'm out for where I would have liked to get an entry. Option two is the more conservative option. Wait for a potential pullback that may not come. Much better risk to reward, much better risk structure. Risk is the market moves and it doesn't do this. And I just sit here with you guys watching it. So I'm not going to take this first breakout 15 minutes into the open. That's just a little bit aggressive for me. It's just a hair aggressive for me. And if the market takes off and runs, I just have to sit here and watch it. That's the bottom line. I'm not taking the first 15-minute break of the opening range to the upside. The market, for me, is most of the time too volatile. It does not give me a good way to structure risk. I have to go right below the session low or right below, overnight low, and it doesn't give me a good risk to reward. I take a lot of stop outs doing that, just through back testing and forward testing. So if it happens this quickly, this early with no pullback, I will wait for structure. Maybe we do form something like this. We crack to the upside, pull back in, and then start to turn. I'm in down here. Stop loss below this level makes sense because now we have a new area of invalidation. We've already formed this move to the upside. So that's my decision there. Again, I think that's the benefit of trading live this way. Right? You kind of get an understanding of why I'm doing what I'm doing, recognizing opportunity here, understanding, hey, this thing may run right here, right now. More often than not, the market doesn't break and run, in my humble opinion, to one side without pulling back and give you a great way to just buy off the open on the first green candle. Again, bullish overall. This looks like potential move to the upside. I like it, just not to take this. But this is certainly a position, right? This is certainly a trade. Breaking out to the upside, stop loss below overnight low, and movement up here. Looking for this. Yeah, going to look for a pullback somewhere into this level, wide stop loss. That's my game plan. But we may not get it again, and I'm going to be okay missing the breakout, right? Because I'm just not taking that breakout style trade. Waiting for some form of a pullback, and this isn't bad, right? Overnight session here at like 7 a.m. where we did come back down and test these lows. Maybe this is all we have to do. We don't have to come any lower down in here, but I don't want to take it for, again, those two reasons. Often you kind of run two risks. One, that the move is going to continue, but you're just too tight catching the breakout and you get stopped out. Or two, you take the losses on the choppy days, where even if this ends up being a choppy day, if I get an aggressive entry, low in the area, low on a pullback, I typically am not stopped out. I'm usually going to be able to just survive some chop back and forth, maybe small loss, half an R, maybe small profit if I hold it into the afternoon. But this looks strong, man. This looks strong for a breakout to the upside. Do I trade? Mainly NQ. Mainly NQ. Really have been hyper-focused on NQ. I trade ES as well. Overnight holds, longer-term holds, same thing. If I'm trading NQ, I'll also have trades and stuff running on ES just for additional opportunities. But I'm looking at US indices and almost all NQ here. Same time of day, same time frame, same session. I think that's how you become a master at it. Yeah, I got my gut tells me this thing just wants to go, and I think this could be a very bullish day. I'd be surprised if we turn to the downside and just absolutely sold off. I think we can absolutely have a choppy day here, right? We did have some large movement. We have some more information coming out. Friday we have, looking at the news calendar, unemployment cost index, PCE price index. Yeah, not a lot. That's really not that important. Chicago PMI. 10 a.m. we have pending home sales and advanced GDP index. 10 a.m. Pending home sales. GDP index already happened. So 7 minutes we have orange folder, medium impact news. 10 a.m. Eastern. Not really worried about that, but yeah, this thing could go. I think this thing could go. So, entry number 1 is coming up. Retest of prior day high. Highs broken in the uptrend. Again, I'm going to wait. Going to wait for the pullback. I could almost set a limit order today at the spot that I want, but I'd consider taking it. I'll see how it comes down. I'd consider taking it from the middle ground of this zone, the 630s. I would love a retest of like 550. I really would. I think it would really set us up for a large move to the upside. Here's your case for maybe not jumping in on the breakout, right? That looked really appealing up here. Here we are, almost 60 points off that high. Yeah, about more than 60 points off that high. So I'm going to wait for the larger pullback. Again, may not come. We might turn and burn from here, right? And I was in an instance where I waited down here, and I was like 30 points or something like that away from an entry that would have been a beautiful move to the upside. I just didn't catch it. So, there's a downside to waiting, but it comes down to risk structure, right? It comes down to like, where do I think this market can go? Where do I want to look at potentially taking profit? And up here is a pretty major area, right? The 900 is a pretty major area. The closing this gap. I think we potentially find a lot of resistance up here if we move up here. So I have to keep that in mind, right? I'd like to take it. There's levels above. Probably going to wait for this 10 a.m. news, just kind of see what happens at orange folder, medium impact. It's nothing crazy, but we got orders above into the 780s. This looks good to the upside. This looks really good to the upside. Retest of this area. I may look to take this on a breakout to the upside. If we were just going to move from here, I want in. Stop loss below the lows. And if we have to come down, take me out first and then continue. It'll be frustrating. But we got liquidity showing up to the upside. This looks strong. Again, I would still run what I would consider a wide stop loss, right? 150 points down below overnight lows. It's just not a wonderful one. But this looks strong. Strong. Bookmap's giving me some additional confidence. Again, the risk is, it ends up being a choppy day. We come down and sweep this low. I've got to realize a loss. Ooh. That's some volatility there, huh? Wow. What was that is always the question. It's a good question. Not news yet. 10 a.m. We'll be talking right now, right? No 9:55 news. No. Yeah, man, it is. These are headline markets, right? So headline markets is kind of a term for when we're trading and there's quite a bit of news coming out. There's a lot of uncertainty, unstable things going on in the political atmosphere, the world atmosphere. There's a lot of that. There's a lot of that right now, right? We're trading a U.S. indice here with a new president that just came in. A lot of different things going on there. A lot of information coming out. We've got massive stuff coming out of China challenging our tech industry. Obviously, the market is interpreting that is either good or bad. But I think like any one report comes out from that area, that sector, and we could see rapid changes in price movement. So how do you handle that? It can be good and bad. My opinion is you trade the way that you always trade, and you just structure your risk. And you really, it's ever important to accept that risk. Whatever stop loss you have in the market, you better accept that number plus a little bit in case it gets slipped. But here we are retesting the middle ground of this zone. That was really a harsh reaction to the downside. Like very aggressive, a lot of volume. I'm going to wait. Oh, let me see volume. Yeah, quite a bit of volume. I'm going to wait to see what happens there on this. Again, my initial area for buys is down in the 550s, right? It would be a sweep below overnight, not overnight session lows, because here's session changeover. So technically, here would be our overnight session low, right? All the way down here. But a sweep below this 7:45 a.m., 7:15 a.m. Eastern low here on the 15-minute chart. That's where I would like a buy structuring for a higher time frame hold to the upside. This is given an opportunity right now. We push to the upside, harsh rejection, right? Whatever that was right away, it's giving a better entry opportunity right from the middle ground of this zone, right? You could say break, retest, looks a little scary with this wick, break, retest, and then potential continuation. And, here's your chance right here, right now. You're going to wait for this. That might not come. We're going to turn and burn from here really, really aggressively. So that can absolutely be the case. Again, I'm going to wait to see. Like we said, if we get structure to the upside, come back down, and then continue, I would look for it that second time, right? Because now we have more data. We survived whatever this pullback is going to be. Initial buyers getting taken out and then continuation. But I'm not going to buy into this just yet. And again, the risk you run for waiting is missing opportunity. The risk you run for getting involved too quickly is realizing a loss because you got involved too quickly. It's a double-edged sword. There's not one best way, Trading breakouts has its benefits and drawbacks. Trading pullbacks has benefits and drawbacks. You just got to find what works best for you. Try to apply some consistency. Form your thesis. Continue to adapt like you hear me doing right now as price is printing. And kind of stick to your guns, right? If every time I say I'm waiting for a pullback, and then I buy a breakout, I'm a breakout trader, and I should plan my trades for breakouts and backtest that way and structure your trades that way. Excuse me, guys. Hanging tight, watching this thing sell off right now. That was a pretty harsh rejection up there, man. We found something we didn't like right at that level. Still like this long. Again, I'm going to get ready to enter down below these lows. Just taking a look. Again, I can absolutely be on the wrong side of this. 525, we got quite a bit of liquidity. I'm watching Bookmap closely just to see what pops up. If we get a lot of orders in one spot, I do think that could make for a decent entry. Right now, that's looking like 525. A lot of volume on this to the downside, right? Look at the 2-minute chart volume down here. You can see it on Bookmap. Big volume bubbles to the downside. There's quite a bit of transactions taking place. There's a bit of strength behind this. We are just cracking below this low here. Again, I'm going to wait for it. I'm going to wait for it based on what I'm seeing. 100 orders on the book at 25. Another 50 at 500. That's stupid aggressive to the downside. That may be all it needs to do. This may be all it needs to do right here. But again, I'm looking for another couple dozen points to the downside. Probably jump in with 2. That's looking pretty good. And again, this is going to be fairly aggressive, right? Fairly aggressive on a move to the downside here. Can we get my area? Can we get my area? We swept down below. Glad I waited. This would have been ugly. Stop loss would have been here. Really happy with my patience so far. Good read. Sticking to my guns, sticking to the plan. Can we come down into this area? And now again, the way that I'm using Bookmap as an added piece of information, 525s with quite a bit of orders on it. That's what I'm looking for. Sweep below this low. I'm safe sticking to my guns to get in right here. We're gonna find out right now if I'm gonna miss this move because I'm waiting for an even deeper pullback than that may not come. But this looks aggressive, man. This looks really aggressive. If I'm gonna enter long on this, I do want a really wide stop loss. I want to allow it to come down even further, chop around. Hit the 500s and kind of do something from there. So let's hang. Why 525? 100 orders on the book down at 525. Looking at Bookmap over on my second screen, it is a level, a pretty obvious level down here, right at the lows, you know, kind of around this zone. It would be a deep push into this area of high volume, really like this almost dead set at this volume point of control. Really right down at very near the close, yesterday's close, session changeover. You know, this is what I'm looking at, deep area for a push down. One more big push out of this candle. Took that short. Nice. Very nice. Very nice. Very nice. Scalping in. NQ's brutal. Look at that 15-minute candle. All waiting. Been on NQ for a while. Yeah, I'm going to wait for it. Here's the decision I'm making right here, guys. I'm going to wait for this. I'm going to wait for 525 to get taken out. And if that does, and then look for a really aggressive long down here. If that doesn't happen, if we just bounce from below these lows, I'm going to wait for a continuation back up to the upside really aggressively, then look to get involved, stop loss just down below session lows. That's my game plan. If I'm going to enter really aggressively like this, buying into selling pressure, right? That's what I mean by entering aggressively. Buying into low time frame selling pressure while maintaining a nice bullish structure on higher time frames, right? Looking at this as a pullback and then a potential continuation. If I'm going to enter that way, I like to do it really aggressively, right? Like I like to wait for it to be really low. And, you know, I'd prefer to like miss it down here and it turns and then I say, okay, well, that's probably the low that we're going to put in right here, you know, gives me a way to structure risk rather than, you know, jumping in like right here as we're coming down, right here in the middle ground. You know, I'll just wait for it. Yeah, another option is you scale in, right? It's advanced trading only if you're going to scale into a position and drawdown. But if you pre-plan it, I could say I want to be long here when I sweep below this low, and I'm going to go in light, half my position size, maybe with one contract. And I'm comfortable being long from 525, but I don't know if we're going to hit 525 or if we're going to bounce from right here. So I'll put another entry at 525. Same stop loss, you know, really, really, really wide. It's not my favorite thing to do. I think you end up in some positions that do move that are really light and kind of like, you know, not worth it to be in. You also get ran through. It can be a tough habit to control if you allow yourself to start doing that as well. Adding 2 trades in drawdown. Not really something that you see me do unless it's extremely pre-planned in a situation that's exactly like this. Again, guys, just a little bit hyper-focused on this. I don't want to miss a quick crack to the downside, but I'm watching this thing find buyers here, and this may be a turn. Yeah, as of right now, take it from 70 points higher up. This looks like we want to find buyers below this level. tempted to take it from up here. This looks like it might be it. Man, I'm gonna stick to it. I already waited for my move. Again, sticking to what I just said 5 minutes ago. 525 area that I'm looking long really aggressively. This looks like buyers stepping in right below this low. That may happen. If this does not happen, I will look long from way back up here with a much tighter stop loss, anticipating that we do not come back down to 525 at all. It would be new data printed, showing buyers in control after this really aggressive sell-off. A lot more can happen between now and then, but that's where I'm at for it. Something like this. I'm taking the break back out after a sweep below a really, really nice low, looking for a continuation of the upside. Probably have initial balance at that point. We'd have IB high up here. I'd be running a very different type of trade, but a similar size wide stop loss. But I'm not going to jump in right here. Plenty of opportunity to. This looks like a fine trade from down around this level. Again, following higher time frame structure, following initial pop at the open, sell off, and then this this nice frustrating move that a lot of people get stuck in right here, buying this breakout. This deeper pullback may not happen. But I'm going to wait. That's my game plan. And if I have to watch the market move without me, I'm making my peace with that. What do you guys think? You getting long? Let's see. Brian, market key projection project. A couple people locked up. Diamond short, ES. Nice. Cool. Appreciate you guys. If you're not in the free Discord, hop in the free Discord, man. 1,400 members, 100% free Discord, just like free live trading on here. We'd be more than happy to have you there. Hit like, hit subscribe. I am here every day, 9:30 a.m. Eastern, trading live for free with you guys. And if you trade with prop firms, if you use any paid software, if you want to get a discount on anything, check the links below in the description of this video. I've got a handful of companies that I'm partnered with. You get a benefit. I get a benefit. Everybody's happy. It's a tough one, guys. It's a tough one. This would have been ugly. This would have been an ugly breakout to the upside. I'm very tempted to get long like this, because this may be it. The way that we are finding buyers below this area, right? Sellers not able to take this thing lower, at least right here, right now. But I'm cautious that we get what we got yesterday, right? Where we kind of drift lower before the push up. And I'm going to wait for my level. I think that's what I have to do here. What's up? I want to ask if you ever use pivot points or central pivot range. Yeah, one of the guys I was talking to yesterday actually uses the central pivot range. I've played with them, man, but again, I talked about this a lot yesterday. Just like anything else, I don't think any one, and this can sound like weird, right? I don't think any one tool is better than the next. I think there's so many different things you can use, Fibonacci and Bollinger Bands and RSI and 400 different levels and way to find them. Got someone very experienced in the group that uses options data and TPO. I use some volume profile. You can use different things from volume profile, value areas, point of controls. There's so many different levels. I think it's all about finding what works best for you on the instrument that you're trading for your specific time frame, and that it's not really universal. There's not something so clear cut being the best, at least in my humble opinion. So I played with those before. I seem to like what I seem to like. Discretionary levels based on structure, market structure. You can call them support and resistance, supply and demand. I just call them areas of interest. I use the volume profile to confirm some of that. Along with that, a couple of objective levels, prior day high and low, I think can be very, very helpful. Initial balance, the 1 hour opening range, very, very helpful. You've also heard me talk about it 20 times, but I pay attention to the overnight high and low. Like I can mark that out if we needed to, but I pay attention to the high and low put in between session changeover and market open. And then along with that, I am looking at yesterday's session. Where is the point of control from yesterday, right? Where is the areas of high volume to the upside and downside traded? Where are we in between that? But and then order flow, a little bit of Bookmap on the side. So, but again, I think pivot points can be great if you like them. I think it just comes down to building confidence in your tools. That's what matters, right? Focusing on price action and market structure, because that's king. And all of these tools that we use for the most part are going to be built around price, time, and volume, or a combination of all three. They're going to be a derivative. So you should be looking at the main thing first. And then past that, what works for you? What works for your system, right? Your levels. And, find your combination. But yeah, they can be fine. They can be great. Plenty of great guys that use, pivot points or that combination, central pivot range, are using, I'm assuming SNR, support and resistance, for confirmation. I use areas of interest. I use discretionary rectangles on my chart that are based off of price action, market structure, and volume. That's what I use. How I use them specifically is not specifically for an entry or a target, but areas that I want to pay attention to on the chart. If they weren't there, I would still be paying attention to that area, but it's just a nice visual marking. There's no magic behind them. It's just discretionary, meaning it's my subjective opinion. Objective would be prior day high and low. Objective meaning it's not my opinion. Prior day's high is on MNQ, the current month contract, is the same on my chart as the same on your chart. So that's kind of the long answer there. But again, that's what helped me, right? Working with guys that were constantly telling me, this is the way to do it. Here's the way that I trade. It's the best thing ever. It's beautiful. You got to use these tools. And I was so enthusiastic, and I would just go through that shiny object syndrome that so many of us do. One indicator, the next indicator, learning about the next strategy, the best thing ever, learning about these levels. And you go on for so long, losing money, and you realize that there's guys making money over here doing this, and there's guys making a lot of money over here doing this, and neither of them use anything that overlaps. And then there's 5 other groups that have the same thing going on, watching this sell off. So for me, what helps the most and what I think can help most guys is start asking yourself, how can I simplify my trading? How can I eliminate things from my chart? How can I recognize that none of this stuff is going to magically give me a really great win rate? I'm still going to end up with, a 50% win rate and a 1.5 to 1 or something, right? Modest numbers. Those are random, by the way. How am I going to accept losses? How am I going to be able to handle my losing days? How am I going to be able to continually structure risk and not mess up on my winning days? And if you shift your focus from trying to find the way to never take losses and to read the market and to get away from the market's uncertainty and unpredictability and into risk management and mindset, you watch your trading shift, man. At least that's what happened for me. That's really when I started to make progress. When I stripped my charts, focused on my mindset, focused on my risk management, really focused on risk management, accepted the unpredictability and the randomness in the short term, and that no matter how good of a tool I had, I don't know what's going to happen next. I'm never going to know with 100% certainty, and I don't need to make money. Just need to know a decent amount of time, slightly more often than not, what might happen next. But accept that the next time and the next time and the next time after that, I might be dead wrong. That's okay. So that's the thought process. Use the tools that you use. I think volume stuff can be a little bit helpful. But backtest with it, build extreme confidence in it, unshakable confidence. Have a way to quantify your edge through backtesting and forward testing before you put risk on the line, and then go to work. But recognize that you can add every indicator on TradingView, and you will have a line for every single tick on your chart. And they'll all work some of the time, but none of them will work all of the time. It's just about working enough times to be dangerous, right? And I think it can all work. Pivot points, whatever kind of levels you want to use, Fibonacci retracements, EMAs, moving averages, smooth moving averages, combinations, whatever. It can all work, man. I think some of the stuff's a little bit out there, but it can all work. This is interesting now, guys. This is interesting. We've got, and I'm sorry to go on that long tangent, but that kind of needed all that information. We got liquidity down to 500. Got liquidity down to 500. So we really didn't bounce aggressively here. We took a long time to come down to this area. And I would have liked to see even better a crack lower and then a crack back up. I'm still looking long, but I don't like how long this is drifting lower. I'm still looking long for my same area, 525 to 500. We have liquidity down to 500 and not a whole lot past that. Really wide open price. So I'm happy I've waited so far and didn't get involved up here because we're still drifting lower. But I'm waiting for us to continue this deep push lower, like we talked about. Same thesis since I hopped on here. Looking for the same area. Looking for to continue this push a little bit lower and enter very aggressively for a long to the upside, or turn and burn and start to move where we are not going to continue lower. But again, price action can do a bunch of different things, and how we reach a level and the time it takes makes sense as well, right? Like maybe I'm looking for this to be really aggressive resistance, right? And a move like this is going to look very different than, a move like this, where we just don't really find any kind of movement. We kind of get there, we hesitate a little bit, and then we kind of go like that. We got here, right? We came up to this level, and maybe I was looking for a sell off this level, but no harsh rejection, right? No indication of buyers. We saw buyers right down here. That looked like I was missing it. But we are kind of drifting lower. But yeah, you guys got good questions like that, feel free to ask them in the chat. Trading questions. Happy to talk trading with you guys. That's what we're on here doing while we're watching the markets. Eyeballing along. I have roles in the Discord, and I have one of mine says Zach, so I could make my name a different color. Someone wrote, the only way to unlock Zach mode, your hair and beard length ratio needs to be at least 4-to-1. Oh, you guys are funny. Is this it? Is this me buyer stepping in? I don't know. Again, I'm long down here or long up here. Nothing in between. That's what I've resigned myself to today. Prefer to be aggressively long down here, and I'm not going to take it a couple points away. Not going to chase it. That's my approach. That's my strategy and my thesis for the day, my discretion, and I'm sticking to it. I'd almost be comfortable setting a limit order and a stop order. We make it all the way back up here. We crack this high. I think we're going higher. I think that's as low as we're going on the day. A move like this would be really difficult to work with. Can it happen? Absolutely. Absolutely. But more often than not, we don't just expand the highs, the lows, the highs, the lows, the highs, the lows over and over and over again. It'd be pretty abnormal price action. We watched it a couple weeks ago. We had a Wednesday where it was just disgusting, but not normal. And again, to the downside, looking long. Off of this nice move to the upside day over day. Aggressive entry somewhere down here. This may be all we get. But liquidity down here. Level I've been eyeballing deep into this area right here. I want it. And I'm going to try not to jump the gun. Coming up on initial balance. We can get that marked up on the chart. Initial balance is the 1 hour opening range from 9:30 a.m. to 10:30 a.m. Eastern. This is not set yet, right? Because it's only 10:27. Got to wait for this. Got to wait for this time to hit 10:30 and then tag it to the low. But it looks like we might get there. This is going to be. I really don't want to trade against this stat. I traded against it yesterday and it didn't work out too nicely for me. The statistics behind this are, more often than not, one of the two sides break or both of them break, right? Like 98% of the time or something, one of these is breaking, at least one, if not both. And then strongly more often than not, over 3/4 of the time, over 75% of the time, if we break one of these, we don't come back and break the other. Only like 20% of the time do we break both. So, and this, continuing on that, if we break one side and typically don't come back and break the other, we typically extend. We don't just typically sweep the low. It happens, but more often than not, there's an average that shows we extend a pretty decent amount. You can get these exact numbers if you guys want to hear them. Lastly, thirdly, the side we put in last, which is this side right here, right? We put this side here in first at 9:50 a.m., this side in second at 10:20 a.m. The side we put in last is the one that typically breaks first, like 3/4 of the time or more. So what this is showing us so far, we're setting up to put the IB low in last, which would indicate that this side breaks first. If that stat holds, the next stat is we typically extend this by a decent amount, and we typically do not come back and trade above this level within New York session. So how can you use this in your trading? Maybe you're like me. Let me mute Discord. Sorry, guys. Maybe you're like me and you're looking long, and you would be trading against a lot of heavy statistics on this one. Heavy statistics. We break this low at 10:30. I'm aiming for something that doesn't happen often. I would also be aiming for this one to break first if we didn't break this in the next 30 seconds, if we put this low in. And I'm starting to stack statistics against myself. Here we go, trading at the 30s, trading at the 25s, watching on Bookmap, waiting. A lot of volume being traded here. Down to the 500s we're trading 25 right here. I'm going to hang on this, guys. This is my level for a long, but I'm hanging on it. I'm hanging on it for an even deeper push down. We got a lot of liquidity right down below here, and I don't know that we stop. I'm happy you're taking it down around 500s, but this is going to be a risky play. Now I'm buying into a really aggressive downtrend here. I'm still looking at it, but now I'm looking at it at 500. Adjusting on the fly. Looking at the 500 level for a crack below that for a potential buy. It'd be very aggressive, and I'd go stop loss way down below prior day low. But this is not finding support. This is going to be a really aggressive play, guys. I'm still going to look for it, but this is aggressive. I'm going to give the fair warning. First off, remember, I'm not a financial advisor. I'm just an idiot on YouTube. Nothing I say or do here is financial advice. Make your own trading decisions. Most traders lose money. Almost everybody that trades loses money. You know the disclaimer. Read the disclaimer in the bottom of this video. But my additional comment here is this is really aggressive. This is going to be a long, here we go into the 500s. Again, watching Bookmap on the side here. Just getting a little bit of a better read of volume and what that liquidity looks like. I'm looking for a crack below 500 now. There's 100 lots sitting there. I don't know why we turn from here, leave that on the book. We might, but I'm looking us to trade out 500s. And then I'm going to take it long. And even that, again, very aggressive, right? Like this is weak on the day. We'd have to find a lot of buyers and continue back up, but that's what I'm looking at this being. Again, just showing you Bookmap real quick. Here's what I'm looking at, guys. Here's the level. This came on the book. That's a lot of orders. We got very, very close to it. I don't want to enter until we fill that, and then potentially these buyers step in. So again, just kind of using Bookmap as an additional piece of information. Do you need Bookmap to know that 21,500 is a major level? Probably not. You could probably assume that you want to wait for that level to be traded, or potentially look for volatility at that level. But waiting longer than my initial 525 level, because we got a lot right down there. We came down into this really aggressively. I still like it really aggressively long. I'm going to wait for a crack below. That's my game plan. Don't want to step in front of the bus just yet, but I'm about to step in front of it. Here is our IB low. Yeah, it's going to be quite a bit of risk. Quite a bit of risk down below prior day low. But at this point, no other stop, no other tight stop is going to be a good invalidation level for this. Tempted on this one. Are we going to fill this 500? Are we going to go from here after sweeping down below? Down below this low over here. Looks like we're moving away from 500s. Orders are still in the book, but I don't know that we come back. This looks like the pushback up. This level was clear also. This bad boy right here. Overnight session low. Boom. Oh. That was swept nicely. Right below that. Well, let's see if Bookmap's going to help me or hurt me today. Gave me the 525s really, really aggressively. Again, adjusted on that one, right? Waiting for 500s. We had a lot of selling pressure come in, a lot of liquidity start to come on the book down below. More often than not, my read of Bookmap, that stuff right below price is going to get filled. It's going to get tagged. And it doesn't make sense to jump in right above it, but that's an aggressive pushback up. I don't know that we come back down, and I think that may be the start. Trading 560s. I'm going to watch to see what happens here and look to adjust again. That looks like it, guys. That looks like it. I'm watching intently. And those 525s are looking real appealing now. Real appealing for an entry. But I think this is going to be the move back up and the continuation long. And I'm considering long with a stop loss just below this wick. Anticipating this to be the low that gets put in and a push back up. We're not backing off this yet.
Order filled.
I'm getting long from up here, guys. I'm looking at this as this is the low. Let me just throw a wide stop loss on here for now. This is the low that we're going to put in. Bullish structure to the upside, going to hold. It is a different entry than the super aggressive one and a stop loss way down below prior day low because now we waited for the turn back. We still have liquidity down below 500 or down at 500. This thing is taking off pretty aggressively back up to the upside. We could just be retesting this low here and looking to continue lower. But again, I'm maintaining the same thesis that I've had all day, which is bullish structure, potential move to the upside. Now we've already broken IB low, but the sweep below this level that I've been waiting on all morning and then aggressive buying right after that, I think this could be the low that gets put in before the drift higher. If it ends up being a choppy day, pretty wide stop loss, we got to come down and sweep these lows. I'm going to try to run this wide enough. I'm going to adjust it right now. Wide enough so we don't get tagged out. If it's a down day and we're just going to continue lower, I'm dead wrong and I'm going to be out for 500 or so. So let me do some. Yeah, down below the 500s, I really would want to let it come down and retest this level. Not blasting off just yet. I'm going to go about... looking at structure, right? Want to get my stop loss in there that makes sense. Down into these lows could be dicey, but from a risk to reward perspective, you know, back up to prior day high, back up to IB high, back up, you know, way up to this level is very, very aggressive. Yeah, I'm going to go, I'd like to get below 450, but that would be really wide. Yeah, 40 points below the low is pretty sweet. It's pretty sweet. That's my trade, guys. Long two contracts from 51,584. Stop at 21,460 and a quarter. Area got swept. Didn't take my really aggressive entry down at 525 because we were coming through it so aggressively. And when that happens, we can just straight up knife through. Waited for this push back up. Selling back off at the moment. Maybe we need to come back down and check these 500s out. But that was an aggressive move away from that area. These start to become somewhat irrelevant unless we come all the way back down to it. Once we come so high off of it, right? We bounce... 88 points off the low. So that's buying into buying pressure right off that bat after we put a really aggressive low in, looking for this move to continue to the upside. Kind of the two times that you're actually going to watch me hit the buy or sell button, right? Really aggressive at a level, like right down low, or as price is moving in a direction and I'm jumping in with that movement. Level of structure to structure risk. But we'll see. We'll see how this one plays. Waited all day. Waited. At a certain point, you're just going to wait yourself out of the market completely, not take a trade, and you'll always be waiting for a better entry. So that was long enough after watching that sweep below and then aggressive buying pressure to step in. Looks good. We come back down below this low. Won't look so good. We come to trade the 500s out. That can get pretty dicey down here. We may be in for an aggressive move to the downside. This may just continue to sell off like it is right now, but I'm okay with this trade. That's where I'm at. Sometimes. Do I watch ES while I'm trading? Sometimes, but not religiously, right? Like I'm not really going to say, well, ES is selling off or YM is pushing to the upside, so NQ has to do something next. I take a look. I glance over there, kind of just get a feel for what's going on, make sure like one is not on an absolute tear, the other one's on an absolute sell-off. But I try not to focus too much on another instrument while I'm trading one, because you end up like trading the wrong chart. That's kind of the way that it's put. You end up trading ES on an NQ chart. So we'll see if we're actually going to find buyers here, or if this is just going to be a move to the downside, right? This could just be the wick up, take everybody out that was short down here, and then pull back down, and we're just going to continue to sell off today. Kind of disrespect some of this higher time frame structure. We could see that, we could see that happen. But this to me looks really, really nice. Aggressive selling off, but buyers found down here. This is the beautiful level to find some support. If we can hold up the 500s, maybe come and test them by 10, 20 points, I'd be okay with. That's why my stop loss is down here. But we might not. Might sell off. But again, I like this trade. In line, something that plays out, slightly more often than not. gives me a good way to structure risk. And if it plays out, gives me a way to make more money when I'm right than when I'm wrong. Fits the bill. Jumping in here on the breakout would have sucked. That would have been terrible. Even an entry right here, right, where I was starting to look for a more aggressive entry right here would have been pretty tough. Waited for it to come all the way down to that level we were watching, right, the 525s, really close to the 500s, and then bounce. And that type of aggressive pushback up, right, most aggressive pushback up off the lows that we saw all day. Am I correct in saying that objectively? About 91 points. Let's see. We wicked down here and then came back up. Yeah. 90-ish points off the low. Almost 350 ticks off the low. That to me says buyers are in. Let's look to move on this. So we'll see. Or we'll see if I'm in a similar trade that I was in yesterday where we just drift lower and slowly wick down and take me out. Decent amount of volume. Yeah, decent amount of volume down at that level. That looked pretty good. Declining right now. Nothing really crazy to the downside. Looks like buyers have some volume, but not anything insane, right? Like not a huge, massive spike and a pushback up. But we'll see. In long, from 584, stop at 460 and a quarter, nice and wide. $495 worth of risk in this 50K XFA. Trade these pretty aggressively, as you could tell, risking $500 per trade. But I got a pretty low trade frequency, right? You don't see me putting on 37 trades. I'll wait patiently, read the market to the best of my abilities, use the tools that I use, and put my trades on and let them play out. Like the gentleman was talking about or was asking about earlier, and I started talking about doing what I can to get better at less micromanaging these, less touching them. My data shows most recently that had I touched stuff less and just let it run to stop loss or break even, my P&L would be better. Sure, I've cut some early and saved myself a full stop out, but I've also cut some nice winners early or at break even that would have continued to move in profit. And those profits would have outweighed the saving at break even or stop loss. So that tells me listen to your data, right? Journal your trades, review, and look at large sample sizes if you can, and then respect that, right? Data is not going to lie to you. It's going to show you, hey, every time you stop yourself out at break even, or more often than not, the trade continues to move in your direction, and you're not saving yourself stop outs, you're cutting yourself short of profits. Maybe it doesn't show that for you. Maybe you say, hey, every time your trade gets to 75% to stop loss, every single one hits the full stop out. Maybe that tells you to tighten up, right? You don't need to run as wide of a stop loss, right? You're not saving yourself anything. If you take that much heat, you're wrong. So read your data, and it'll help you adjust. Simple journaling, screenshots of the charts. I'm going to be playing with TradeZella soon. Just got partnered up with them. Pretty sweet tool. Been working with that. But the way that I've been journaling is super, super simple. Screenshot of the chart with a position tool, something just like this. Right where my entry was, right on that candle. Stop loss where that goes. Wherever I was thinking of taking profit. You can zoom out. You can do it across different time frames, but you get your entry, stop loss level, your target level. Save that for later. If you make a note and say what you did contract-wise, why you did it, what was the thesis, what was your game plan, you're able to go back and review that. And that, along with whatever your broker collects or whatever the prop firm collects, is a pretty good starting base. You can review at the end of the week, review at the end of the month, and you identify some trends. Every time I'm entering long, below VWAP, I'm getting stopped out. Or every time I'm, jumping in too quickly on a breakout, I could have got a way better entry, that type of stuff. And then trade management, right? Like, what did you do? When did you go stop loss to break even? All of these things. Review that, and that's your nice process to know what's working and what's not working. Try to do a little bit more of what's working, a little bit less of what's not working. as we watch this trade play out, testing these lows, coming back down. Would have really liked to see this continue right off the bat, get back above VWAP, and start to push. Don't love this. Don't love this. Not at all. But, like I just said, I'm going to leave my trades on. You make your thesis, and you stick to it. Hold your trades. When I trade much more higher frequency, scalping, more aggressively on lower time frames, my data shows that I do much better managing my trades. Cutting my losers quickly, adding in profit, cutting based on price action and market structure very quickly. Not so much on the longer holds. Yeah, man, we're rolling right back over. All good. If I have to take another L, I will. End the week red if I have to. Microsoft. Just checking Mag 7 real quick, taking a look. These are looking dicey. These are looking dicey. Nvidia coming down to like a low. Again, I don't typically watch the Mag 7. I take a look every once in a while, like I am right now, right? Now that I'm in the trade, just for pure speculation and fun. These don't look fantastic. 3 green, 4 red. Microsoft and Nvidia leading the way on the downside. Huge gap. Microsoft must have missed earnings by quite a bit. And Nvidia is coming back down towards that low. Looking at ES, excuse me. Yeah, ES not looking too strong right now. Similar move, swept down below the low. Aggressively pushed back up. Resistance at VWAP. Resistance at VWAP. Dow kind of just chopping around. It's been much more choppy, kind of in its own world. Yeah, I don't see us selling off today. I don't see that being the play. This can absolutely turn into a gnarly bearish candle. But I was looking at this as a nice pull back down to where we are right now, and then a beautiful push to the upside. Beautiful push to the upside, right? Nice bullish consecutive candles, long little indecision, but long wick to the downside, and then a crack back up. This may be a move back down. Jumping out to higher time frames, taking the peak, 15-minute. Stick with that. Let's see. Going to come and trade out the 500s. So not waiting for the second time definitely didn't help me. Liquidity still there. We'll see what happens as we come down. This looks to me like it's either going to find buyers or this is going to be a violent move lower. There's the crack through. Very aggressive. Let's see. Wide open price action. Do we start to drift? No immediate bounce. A lot of volume traded. But let's see. Stop loss is where it is, so we can come down here and check this level out. We got to come another 30, 40 points down. I'm out. Let's see. No buyer stepping right back in. Doesn't look great. Looks like we set up for the drift lower. But that's part of live trading here with me, guys. Like I talked about, I'm going to show you the wins, the losses, the full stop outs like I'm about to get right now. And yeah, man, show you part of what trading well looks like for me. Waiting for my entry, waiting for my setup, patiently off the open, forming my my trade idea, structuring risk, and then letting that trade play out. Accepting the loss if it has to be a loss, managing the trade to the upside if it's going to move to the upside, and yeah, doing that live here with you guys. You will see it all. Winning streaks, losing streaks, break evens, no trades. We've had it all so far. Watching Bookmap. Order is up at 550 now. Sell orders. I don't know how that's gonna play. Get headed back to the 500s. This not finding buyers right away and starting to bounce. It's a bad indication for this. Looks like we want to drift lower. Not enough for me to go ahead and clip this. Like I said, stop loss is where it needs to be to allow us to come down below this 500 level. We continue lower. I just think obviously much less likely to continue the upside. I'd be out. I don't know where I'd find another trade on this. Just looking onward. If I get the stop, yeah, if I get the stop, I'm not looking for another one on this. This is below every level that I see. I see a continuation lower down to prior day low. Sells look like they're in store past this. Lot of weakness, a lot of sellers in this market. That's what this would look like to me. So sitting tight, waiting to see if we have to take the stop. Yeah, we got selling pressure coming in. This looks like down through the 450s. We got liquidity building up at 450. Down below my stop. This looks like the drift lower. And we are not in for the nice bullish day. Just fake out to the upside and then aggressive push lower. No buyers found. And we'll see. I mean, do we turn and burn from down here? It's definitely a possibility. We come and stop Zach and everybody else out. Find support somewhere down at this area. Find buyers somewhere down at this area, and then bounce to the upside. I think it's much less likely from this point. I think we make it down this far. We're likely to continue. Maybe get down below prior day low, all the way back down towards this area. But obviously, just sellers in for the day. There's my stop. Stopped out for 497. See what we get from down here, man. Opening up on an 11 o'clock candle. A lot of volatility comes in. Almost survived to 11 o'clock. Orders at 450 don't look good. All the way down here, right below that low. This, to me, now, looks like the continuation lower. Right? Not ready to jump back in at any point down here or as we push back up. I just think it's much less likely that we break and run to the upside. So that's going to be my morning session, guys. I'm not going to keep you on here because I don't have another trade set up. I don't see something playing out to the downside that's going to entice me. I don't see taking a short off of a pullback up or anything like that. We'll see how that stop loss placement was, and if we just rip to the upside from here, that would be a frustrating but ever so possible move. I would anticipate this pushing lower. I think we go trade out 450s. I don't know why we would turn from here. A little bit of resistance here I could see, but we're down below this area for sure. So I'd see potentially crack below prior day's low. And what happens when we get down there? I don't know. Aggressive. Start to test the strength of this higher time frame trend. even some more at 400. Yep, continuing lower. Aggressive move to the downside. Big down day. Yep, liquidity at 25, at 400. Looking like a move to the downside. Yesterday's value area high. Yeah. 80% chance. Yep, I see that, man. Yeah, I mean, again, this looks super weak, right? Had a chance to take it higher here. I like this entry. It's a trade that I'm taking all day, every day. Just not today, right? Just didn't play today. This is a move to the downside very, very aggressively. A lot of momentum here. Obviously, a lot of volume behind it. This looks like we're slicing through prior day low, and this is a move to the downside. No setup for me, right? I don't have anything on this. Don't have a good way to structure risk. Would not be looking long from this point. Don't see the beautiful opportunity for a bounce to the upside unless we started to, reverse and form a lot of structure. To the downside, looks like towards prior day low, towards the lows of this, and potentially below. We get down below that level, all the way down to like the 300s could be in store, but I think that would be a stretch. This can potentially just be a choppy day. It's going to be a big sell-off, and then, choppy type movements. Could see that. Kind of just starting to consolidate in a big range up here. But I'm not going to have a second setup on this, at least for right now. I'll set some alerts, right? Set some alerts at VWAP, down below prior day's low. Maybe back up to like the 550s just to kind of get a feel. If we start to move in one direction really aggressively, we get some more structure. May look for a second trade, but I'm not going to jump right back into anything. Not going to jump right back into anything. So on that note, guys, took the L with you, but it's part of trading live, right? I'm going to take the trades, explain them to you guys, and we're going to watch them play out together. Wins, losses, break evens, all that fun stuff. Hop in the free Discord. If you're not already in the free Discord, 100% free, 1,400 members, share and trade ideas, charts, the good, the bad, everything that goes into trading. Subscribe if you want to chat here next time. I'm live for free every day, 9:30 a.m. And check out all the links down below if you trade with prop firms, if you use paid software, you want to check out Bookmap, Edgeful, TradeZella, anybody else on there. You get discounts, helps me out on the back end. Talk to you guys soon. Trade well, structure your risk. See you tomorrow.